All right, today I'd like to share with everyone the data for January. Our VIREB, which is our board's real estate association, just released the January report. Let's take a look at the average price. Basically, it's still trending upward. Over the past 2 years, it's been gradually rising to where it is now, though there's been a slight dip recently because the market isn't particularly strong. That's the estimate. However, in reality, this hasn't posed a significant threat in the short term. I feel that you can take a look at the current transaction volume. Usually, January has the lowest numbers, but this year, compared to last year, it's even lower. In other words, the transaction volume in December or November was actually very low because this is based on closings. These are completed transactions. But when the offers were written, it would have been in December and November. The number of offers at that time was quite low. So what was the actual figure? In January, there were 41 sales. 41 properties were sold. Compared to last year, 2024, that's a decrease of 22%. But on my end, I want to add a bit more to this because recently we've noticed, especially at the start of this year, that in the first 2 or 3 weeks, we were actually really busy. What do I mean by that? We found that when we went to do showings, a lot of the properties were already in the process of being sold. Either they already had offers, were sold, or were pending. In other words, there was already a sense that things were moving. So I think this data might reveal something, that even though the inventory is very low, as the volume accumulates into January, I estimate that next month, which is this month, February, the volume will increase a little bit. The volume has accumulated up to now. Also, let's take a look at the number of homes listed for sale. We can see that in January there were still quite a lot of new listings, 134 units. Compared to the same period last year, that's an increase of 20%. Why is that? It's because a lot of homes that didn't sell before are being listed in January. About half of them come onto the market then. If we look at last year, basically, for the whole year, there were about 2,000 homes listed and 1,000 were sold. That means out of every 2 homes, 1 would be sold. The ones that didn't sell last year are coming onto the market this year, usually in January. At the beginning of the year, they all come onto the market. So you'll notice that there are usually a lot of listings. If you look at last year in 2024, there were also a lot of homes coming onto the market. It all surged at once. Now, as for the current housing inventory, the active listings, there are actually quite a lot, 237 units, compared to last year, which had 201 units. So there are more listings now, which is actually good for buyers because it means more choices. But there are distinctions as well. Right now, we have several buyers who are looking for really high quality properties. And honestly, there are not that many of those available. Yeah, there really aren't that many good properties, but generally sellers who are asking for very high prices, those listings are still out there, right? But some people have realized that this year might not be particularly favorable because prices have leveled out over the past 3 years. If someone still wants to ask for a pandemic era price, their property just hasn't sold. And if they're still holding out for those prices this year, honestly, they still won't be able to sell. But if they adjust to the current market, if they price it at the market rate, then buyers will step in and make offers and the property will sell. That's fine. So you can see that here. A lot of people talk about this transaction volume. This is the transaction volume, meaning what is the negotiation ratio? Well, the negotiation ratio basically hasn't changed much. There's not much difference. You can see that in January, the negotiation ratio was generally around 97, which means about 2 to 3%. Around 2 to 3%, which means for a 1 million property, to put it simply, that's about 20 to 30,000. Normally, that's the price difference. So they won't be negotiating with you for 50 or 100,000. That's how the negotiations go. So you can see it like this. Now let's break it down further to see exactly what it is. Why did I say that this month we are more active? Let me show you the data. Also, let's look at whether the average price has increased over the past few years and by how much. We'll check out the big data. Okay, now let's go into our backend. This is our backend metrics. And in the backend, we click here, right here. Pending refers to properties that have already had their conditions removed in January. For the entire month of January, okay, throughout January, for detached houses in Nanaimo, okay, the total number sold, let me move my head over here. The total number sold, according to the report, is there are currently 35 units with conditions removed, excluding those not yet reported as sold. This means the sale is definite and firm, but not yet officially reported. Official reporting only follows full completion, like the one I mentioned earlier. So actually, in this case, from what I can see, it's actually not bad, better than I expected. Usually it's not this high. Next, let's take a look at the listings in Nanaimo and see how the average price has fluctuated over the past few years. First, let's look at the average price here. This is the average show price. Let's select single family, meaning detached houses in Nanaimo. Detached houses here, residential. Let's take a look at the past 10 years. Or perhaps we should focus on the most recent 5-year period, specifically the time following the global pandemic. Okay, let's apply these search criteria, initiate the search process immediately, then customize the results to the past 5 years, generate the report and use it, okay? Basically, you can see that in 2021 it was around 800,000, and then in 2022 it boomed to over 1 million. As everyone knows, during the pandemic, prices were extremely high and everyone was scrambling to buy. Oh, that period was really crazy, at that time. Why was that? Because actually a lot of people didn't need to work in big cities anymore, so many people came to Nanaimo. Nanaimo, for the whole family, is one of the top 5 cities in Canada in terms of population inflow. It's one of the 5 cities with the highest population growth. So why is that? It grew so much, of course, after it got that high. When it became too high, the government started to put on pressure and announced that they would begin raising interest rates. When they raised interest rates in March, things started to go down. Basically, that was in 2022. By December of that year, it had basically hit the bottom. It was at the bottom. In fact, at that time, we could still see brand new properties, brand new rental units with mortgages for just over 800,000. Now, you cannot find any brand new properties for just over 800,000 anymore. After that, prices started to rise again, and by 2023, they basically hovered around the same level for several years. So from 2023 up to now, they've pretty much been fluctuating within this range. Here we can see 2 things. First, the Nanaimo market is actually quite stable because it's basically leveled out. And second, during this period, interest rates kept rising, and then later, in 2025, they started to come down. So basically, even during the rate cuts, it still managed to maintain this price level. But there's one thing that's actually quite interesting to look at, which is how many properties were actually sold. Let's take a look. You see, if you look at the trend, this reflects that these are all detached houses, right? Detached houses, just to be clear. Here we can see that in the summer, the numbers are definitely very high. And then in the winter, generally speaking, sales are slower and there are fewer transactions, so this is very normal. Every year around May or June, the transaction volume is extremely high, but right now it's basically quite low. You see, it's even around 1/3. Look, this one is 60 and this one is 150, so it's about 1/3. Then, when it reaches a peak, that's in June. But if you look at it year by year, for those of you who like data, you can take a look at the yearly figures. Okay, I personally like data, so I often look at these numbers. You can see that in 2021, of course, it was really crazy. In 2021, during the pandemic, it was over 1,700. Then moving on to the first 3 months of 2022, things were still pretty crazy, but after that, it gradually started to go down, and then it stabilized at around 1,000 units, about 1,000 each time. But last year, you'll notice there was a sudden increase. So earlier, we actually made a video discussing why this happened, why it was so resilient. So many people started coming in and gaining confidence in the market. You can go back and watch our previous videos about this. So buyers became confident in the market, which is why the numbers started to increase here. This is just one city. Additionally, you can see that Nanaimo actually doesn't sell a huge number of houses. Nanaimo is a small city. If you divide 1,000 homes by 12 months, that's less than 100 homes sold per month. Basically, the market is quite stable. And do you remember what we just mentioned? For every 2 houses that come onto the market, 1 house is sold. So if 1,000 homes are sold, that means there are 2,000 new listings. Actually, this 2-to-1 ratio between listings and sales, how should I put it? It doesn't really lean toward a seller's market, nor does it favor a buyer's market. Personally, I feel it's more like a normal market because the level of enthusiasm from both sides isn't particularly high. Buyers have plenty of options. If sellers price their homes even a little higher, what I noticed throughout last year is that buyers in the entire market were extremely sensitive to price. As soon as the price is even slightly high, they simply won't go to see it. They won't even negotiate. They won't even go to see it. They just wait until the price drops to a level they can accept. And once it reaches that point, they think, okay, now I'll go talk to them. So this kind of thing happens. So as a buyer, you can slowly start looking. Actually, January is quite slow, right? It's not like there are a lot of listings for you to see, but you can start looking at your own pace. According to the data, things have already started moving. It's not that there are no houses at all. I see now buyer activity has already started to pick up. As for you, if you're a seller this year and planning to sell your house, my suggestion is to be a bit more cautious with your pricing because based on the current data, there's no indication that prices are going up. There's also no information suggesting that prices will rise this year. So if you didn't sell last year or set your price too high and didn't manage to sell, this is the message the market is sending. As we often say, as sellers, we need to be realistic about the market. We may have a price we want to sell at, but in reality, that price isn't set by the seller. It's determined by the buyer. The market decides the price. When you list your property on the market, because it's an open market, the information is public and everyone can see it right away. All the listings are available and everyone can see them. Buyers make their own decisions about which property they want to purchase, right? So this information is shared, which allows the properties to compete more fairly. We're an open market, after all, so this is something everyone can think about. If you have any other questions, feel free to talk to us. Okay, that's all for today's message. Thank you. Bye-bye.